We forecast a recession for the developed world in 2023, and that's simply because there are far more economic headwinds than tailwinds, and that includes the corrosive effect of inflation, which likely remains high for a little bit longer, significant interest rate hikes, which do damage to growth, but also high gas prices, a struggling Chinese economy, and so on. And so, realistically, that does add up to a recession lasting a few quarters across 2023. We do also find when we cross check this that the majority of simple recession signals that we monitor are also showing recession, including the fact that yield curves are now inverted. And our business cycle work similarly makes the conclusion that we're likely at an end of cycle moment, which is normally associated with a recession arriving within several quarters. So a recession, more likely than not with 100% certainty, but a good luck could allow growth to remain in 2023, but we give it something like an 80% likelihood. We think a decline would be of a middling magnitude, which is a little deeper than the market is assuming right now, though not as deep as the last two recessions. And I guess the way to think about this isn't just that a recession is likely, but there are perhaps some silver linings or redeeming values to it. And so we think, as an example, this could be a more useful recession than usual. It should help to tame inflation, which is job one if we want to enjoy rising prosperity for the next few decades. It should help to right-size housing markets, which would be good from a societal perspective, and should take some heat out of what is arguably an unsustainable labor market as well. And it might also feel a little bit milder than it actually is, given that we don't expect to see job losses on the scale of normal recessions as companies hang on to workers they fought so hard to find. It's also worth recognizing recessions are not forever. They last a few quarters. And in this particular case, we think it actually sets up growth for a fairly robust period of expansion over the subsequent several years. And classically, there are also good investment opportunities that arise during economic downturns. And indeed, the valuations that we see today are already at least partially reflecting that.